Hello, traders. It's 8 a.m. Chicago time on Thursday, the 16th of January, 2020. Thanks for joining me again this morning. This is episode number 1673. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Risk on sentiment this morning, we're gapping up in the U.S. indices. Um, we are stronger. The market reopened and popped higher into 3,300 in the S&Ps, the century figure, before pushing through right after the European Open. The market is relieved about this phase one deal being done. Rhetoric on phase two has already begun with the VP of the U.S. stating that phase two negotiations are in place, are already taking place, while the Chinese vice premier is stating that it is unwise to rush into phase two discussions already, and and that they need some time. So in either case, this takes a load off of the market. And here we are. Congratulations, everybody. We're at 3,300. So we're still in a roaring market. We continue. Central banks across the globe continue to support and provide liquidity to the markets. So there's probably not much else than to buy and hold in this environment. But uh, as the market gets complacent, we've seen this in the past. I've seen it since 1998. That's how old I am. Where we get into this kind of a complacent type of trade. Um, by the way, I want to point out that, one second. I want to point out that this is the worst kind of market to start creating ideas about the type of trader that you are. This market kind of rewards complacency. And so just make sure you stay on point with your trading plan. This is the type of market where you can get fudgy and still do okay, in my opinion. So that's where we stand this morning. The Russell, Nasdaq, S&P are leaders. Crude oil has rotated to March, so we've rolled in crude to March 2020, or the H0 or H20 contract, depending on your platform. The premium difference is plus 3 cents. And that's where, just make sure that you're trading the right contract. Hang on, I need to clear my throat again. All right. So anyway, so let's dive right in, looking at today's calendar to see what we have. We did get retail sales today, came in at 0.3 in line. We had a bunch of numbers at 7:30 Central, 8:30 Eastern. Jobless claims came in stronger, 204 versus 219. Business inventories and Fed's Bowman NAHB housing index are all coming out a half hour after the open, approximately an hour from now. And we get EI natural gas at 10:30 Eastern. And then an important figure for China this evening, GDP growth rate year on year, expecting 5.9%. The market's likely to respond to any miss on that number. In terms of what was expected yesterday versus what we got yesterday, the primary scenario was for us, because we were opening in range in value on a relatively balanced day. The expectation is for a grindy open with a push up that continues through to 3,300. As you can see here, there's 3,300 right there. I can draw a straight line. That's what I was looking for as the primary scenario. Secondary, it attempts to push higher and sellers come in to bring it back, given the configuration of this sell-off. and the fact that we shifted the point of control down. I was looking for it to test these lows to see if there's anything there. Did not do that. Here's what actually happened yesterday. Yesterday had an open drive opening type. There was a small flutter here, but it really only down ticked a couple of ticks from the open before we saw our first impulse of the day, giving us an open drive. Immediately, we know, and those of you who are in Convergence Head Trader channel or monitoring what's said there by our head traders, immediately we issued a warning to shorts and kept repeating that warning that you do not want to fade this kind of action on a push up. You need to lay off. We did manage to put in a small opening swing high. Broke right out. Again, yesterday was all about being long and getting long. So it was another order flow type trade day where the main setup is looking for rotations down, weakening. In the order flow, I use volume scope for that. Let me see if I can show you that. So looking for rotations down, like an example of it is this one right here. You have a rotation down with a positive delta. You can see the delta went to negative 652 and finished up 15. This creates an opportunity to get long somewhere near the finish for a continuation higher with the trend. Kind of a little nugget for you there. That's just one way to do it. The other way is through Bookmap. So that's what we have overall. We ended up having another neutral day as we look at how we finished up. Let me clean this chart up a little bit. Another neutral day. We did take out the IB high and the IB low again. So neutral begets neutral, neutral day, and here neutral day, very small yesterday. So overall, pretty continuous kind of higher highs, higher lows, and we're back with the point of control pushing higher, accepting values higher, fairly balanced profile at the top, a valid value area. And then the overnight session simply opened and pushed higher. You can see it's another day with a very strong delta throughout. The volume was relatively strong yesterday. We're getting good volume on these pushes up, which is kind of interesting. I mean, I get it on news, but the volume's been pretty elevated. Given that we're in a rally market, generally volume is not as strong in a rally market. We tend to see the range and volume compress. But this is relatively healthy still in terms of its ability to push higher. Let's take a look at the overnight session. We open back up and it's 100% positive long inventory in price. Delta is snaked around the zero line. It seems to float up. It's floating up on OK volume. 229,000, and with a very bizarre looking high. This is a bit of a shelf that we've put in here, a ledge, and it's likely to break to the upside in this configuration. It's not likely to sustain this kind of behavior. Very, very strange looking profile, 3305. It's almost like that strike has a lot of hedge interest or something. I'm not really sure what's going on there. But overall, we very cleanly pushed through the 3,300 here. We pushed to it on the open. Double top later, 3,300 creates an opportunity for a long, at least a scalp long push above, and then it comes back to about the 3300 again, and now it's holding steady above there, above mid, above VWAP. The point of control is right here, and it's likely to continue higher. This is how it's kind of positioned right now. Not much in the way of news in the overnight session, so that's where it stands. Here's the order flow. You can see that the first tests this morning went right to the liquidity that was left behind from yesterday at 3,300. That liquidity has been there for a while. We expect that to be there in the century figure, and it nibbled a little bit, a nice little collision there, pulls back, gets right back into that liquidity again, a higher pullback, and breaks right through. And once it does, you could see a pretty substantial stop run. I did not see a news event on this. Pretty substantial stop run, and we have stopped since then. So there's, have gone sideways since then. So we have what looks like a quick blow off top, and we have not come off at all, which tells me that it's likely to continue to squeeze higher. Looking at liquidity above and below, um, really it's again like I was talking about yesterday with the liquidity yesterday. If you remember, coming in, liquidity was heavy above, and I talked about how that could mean that many participants are positioned long and are offering those prices. That's generally my explanation, at least from my experience, as to why the market tends to move towards liquidity. It's not really moving towards liquidity. It's just positioned with the smart money kind of long or whatever, and is offered out there. There's liquidity above us that's been sticking around here at 3308. I have a measured move area right here at 3305 and 3306.75. These are mathematical areas. And as you can see, the liquidity is a little bit heavier beneath us, and there's really not much in terms of anticipated participation above. My expectation is it's likely to squeeze through these areas and then rotate down and kind of fail back into 3,300 at some point in the session. We'll see how that works. That's a purely order flow based expectation, but that's how it's likely shaping up. Let's wrap up here with what's expected. The expectation this morning, an open auction out of range that pulls back a little bit. I expect it to consolidate here, and then I'm looking for it to push through the 3308 and push a little bit above into 33. The next stock zone is 3311 and a quarter. Push a little bit above there and then come off. And I'm expecting a bit of a sideways day today. That's the main scenario. Again, the bulk of the liquidity below us is again at 3,300 forming and 3295, 3296, which is down here. So if it does end up rotating down, those would be the key target areas. The value area from yesterday, maybe the target area. My throat's really sore this morning. Secondary is a market that's a little bit more blunt in what it wants. The expectation here is an immediate squeeze. Remember, new all-time highs, an immediate squeeze higher into the overnight high, meets the liquidity there, and then we get an impulse down, consolidate in the middle, and then go right for that area down below at 32.96.97 for a test before we bounce back up. Both scenarios are looking for a test up and a push down. It's just a function of the extent. And because we're at new all-time highs in a gap, it brings in scenario 3 and 4 as higher probabilities. And scenario 3 is looking for a push down test, drive up, and then essentially a consolidation up here in the 33.11 area that starts to squeeze up into the close. Scenario 4 is a test up, drive down, which may bring us back to the prior day's close, which is right at 93.75. That may be the next play. My again, I hate to sound like a broken record and saying the same thing every day. My plan again is to wait and see to wait and see which participant is weakening. Specifically, I want to see if sellers are weakening on the push down to catch along, scale out, and hang tight for upper targets, the stock zones above. Right, the stock zones have been relatively on point. Past performance is not necessarily indicative of future results, but overall they've been pretty much on point and reactionaries, and that's what they're anticipated to be. They're anticipated to be zones where the market might react. Just wait for the sellers to weaken, take a long. I know I'm with the trend, so we have a gap. A gap rules day, gap situation. Does the gap get filled? This is a bit of a medium-sized gap, a teeny, and does it get filled? If it gets filled, then we may see a test to the close. If it does not get filled, in other words, if we do not fill this gap zone, then expect it to turn and play. I'm looking to play the long side more aggressively and pushing towards that 10, 11 area on a pullback. Again, gap zone rules, gap rules today are in play. Good luck, and I'll catch you tomorrow. Take care.